Ladies and gentlemen, good day and welcome to Rico Auto Industry Q1 FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod from Essential Technologies. Thank you and over to you, ma'am.
Thank you. Good evening, everyone, and thank you for joining us for Rico Auto Industries Q1 FY'25 earnings conference call. From the management, we have with us Mr. Arvind Kapoor, Chairman, CEO and MD, Mr. Kaushalendra Verma, Executive Director, Mr. R.K. Miglani, Executive Director, Mr. Rakesh Sharma, Chief Financial Officer, and Mr. B.M. Jam, Company Secretary. I now request Mr. Arvind Kapoor to take us through the key opening remarks, after which we can open the floor for the question and answer session. Thank you and over to you, sir.
Good evening. My name is Arvind Kapoor and I welcome you all to the earnings call. The Indian economy fortunately is doing well and the monsoons have been very good and they have been more than normal, and so we are happy about that. And we do see a traction in the rural markets as far as because of the monsoons, and we see a better pull of the two-wheelers in the rural markets, which is very good for us. And we also see that growth coming in from our two-wheeler customers. The GDP has grown by 8.2% in the first quarter, which has been very good. And the unfortunate part is the geopolitical things which are happening around us, especially Bangladesh. At the moment, there is no direct impact on our company and or in the auto industry. There are one or two Indian companies who have OEMs who have plants there who assemble vehicles there. We are still waiting what could happen in that in the current circumstances. If we look at the global geopolitical what is happening, we have been impacted by what is happening in the Middle East and what is happening in Europe. In the Middle East, that has impacted our freight rates, mainly for exports to Europe as well as the US. And the time that it takes for our shippers to reach US and Europe, that has also gone up drastically. And if we look at the other impact we see in Europe is that the demand for the electric vehicles has really come down. We had been told by our customers in Europe that the demand will go by almost 10% in this current year. But we have seen a 30% drop in the demand. So there's actually a 40% impact that has come in the electric vehicles in Europe. That is partly because of the prices, and number two, the dependability on electric vehicles when it comes to extreme weather. In the US, this time there were extreme weathers. In Chicago and other places, the charging stations, others did not work. And the mileage that was promised by the OEMs, they were nowhere near that. In fact, if the mileage offered was 400 kilometers, people barely got 100 or 120 kilometers for the full charging that had been done. So that led to a lot of disappointment, and then many customers are shifting from the electric vehicle to either hybrids and or IC engines. In India, our inflation has come down to 3.54%, which is very good, and we are hoping that this is better than the RBI targets, and we are hoping that we will remain below this. And what we see is that, like I mentioned earlier, the rural market is improving, and so we see the sales of Hero and Bajaj and the TVS, their sales in the rural area have gone up. and there is more pull from these customers. From Hero and from others, we have also managed to get orders for newer components, besides increasing our share of the current components. From Maruti also, we've gained more orders. We've tried to cover up the losses that we incurred in our exports by covering up in the domestic market. And we are working still further on it. The exports this year would be, last year we have crossed about 500 crores. That's the maximum exports we've done in per year. And this year we would be less than that. We would be around 475 to 480 crores. But that's partly because some of the older models which were running for last 10 to 15 years in the electric vehicle, and also 10 years in the electric vehicle and in the IC engine about 12 years, those have their life is over, and the demand came down, but we have got the order for the newer components. So this year we will be about 480 crores, and next year the orders in hand and the commitments that are there from our customers and the preparation that we are doing is for almost 600 crores. But having said that, we are monitoring the situation in Europe as far as the Ukraine war is concerned. That if it remains limited to that extent, it would be okay. But if it expands, then of course it would be a big challenge for the total industry. And in the Middle East also, we are hoping that there would be some sort of an agreement and between Israel and the Palestinians, and there would be less tension there. And if the war expands, then of course these figures could change. But at the moment, we have the orders in hand, we have got advances, we are preparing for exports of 600 crores next year. That will be the highest exports we would have ever done. The other good thing that is happening in India is that the acceptability of the hybrid vehicles, and as you know, your company was the first company to make the hybrid components for Toyota, and Toyota and Maruti Suzuki are expanding. UP government has given some discounts on the hybrid vehicles and for the sale of hybrid vehicles in UP. And we are hoping that other states will also do the same, even though there's a major opposition from the other OEMs, especially the ones who do not have technology for hybrid vehicles. That's Tata's and Mahindras, and they are obviously opposing it. But we are hoping that the traction for there's a big demand for hybrid vehicles, there's a big waiting for hybrid vehicles, and we are hoping that the future would be in the direction of hybrid vehicles, and that would go in our favor. For that, we did make an announcement in the last meeting that we had bought land in Hosur, close to Bangalore, so closer to our customers, located either in the Hosur area and or in Bangalore. That's Toyota and Aisin and other people who are there. So we set up the plant there. And on the balance sheet side, I'd like to tell you that the profits have come down. The EBITDA came down primarily because there's a lag. The raw material prices have gone up. Aluminum prices went up by almost 20 to 30 rupees a kg, and in some cases, even special aluminum went up even more. So there is a lag of almost about 9 crores, which we will get covered up in this particular quarter. And so that's one. Again, there's another figure of retrenchment compensation on the workers in the Dharuheda plant. There were 49 or 50 workers who were left there, and we were unable to use that land and building which is there at Dharuheda. And there was no manufacturing going on there, and we thought that it would be better that we utilize the space for manufacturing rather than just keep it empty. So we did settle with these workers, and now everything is over there. This figure will not be repeated ever again. And we are going to use that facility at Dharuheda for expansion of RFL, where we make the oil pumps and water pumps. And also we'll further enhance the capacity of the pump making in that area. Those are my opening remarks. I'm open for questioning.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Namaskar. Am I audible?
Very well.
Okay. Sir, first thing I want to know is regarding the facilities that now we have opened for manufacturing of components for Toyota. That plant and machinery, how much capacity it is running now and how much revenue it has generated in last quarter or is likely to generate in this quarter? Kindly reply, sir. Hello?
Yeah, just a minute. Yeah, capacity utilization.
Hello?
What we are manufacturing in Chennai for Toyota, that is the first facility we had set up. Okay, that facility was primarily for Renault Nissan, and then we expanded the facility there for Toyota. And there, at the moment, the utilization is about 56, 58, it varies between 56 to 58%. There were some models to be introduced by Toyota, and which they postponed to January and April next year. And once those come in, then of course the utilization will be around 80% in the Chennai plant. But the further capacity that we are talking about, Hosur, that is also for Toyota and for their ancillaries, which is Aisin and the others. And that plant primarily would be for the Toyota. And there the orders that have been released is already to the tune of about 350 crores. And that we would be managing partly in Chennai and partly in and mainly in Hosur.
Okay. Sir, if I rightly heard 350 crore, kindly confirm because the voice was breaking.
So the Hosur facility, the new orders which have been released are for 350 crores.
Okay, sir. And what will be the execution period? Is it for 1 year or quarterly basis or how it is going to?
Yeah, but when do we start?
2026 and
2026 we start the production in Hosur. And the peak value would come in 3 years from the date of start.
Okay, got it, sir. Sir, one more question. We have mentioned that we are going to manufacture a lot of parts for electrical vehicle as well. So is it for two-wheeler, three-wheeler and four-wheeler also? That is my first question. And second question, how much turnover we derived in last quarter from electrical vehicles parts and what we are going to get from this quarter onwards?
So we are primarily supplying parts for electric vehicles, primarily to BMW, and we were supplying to Stellantis, that is PSA, and also to Renault Nissan, and Renault Nissan is the smallest, and we also have orders from the Tata for the electric vehicles. And the turnover has actually come down I'm talking the pure electric. But if you look at the hybrids, it has gone up. And we regard hybrids and electric in the same category. We call it electrification. And but this year, because of the exports, it's going to come. The exports to BMW have come down by almost, and Stellantis has come down by almost 30%. Whereas the anticipation was there would be a growth of 10% this year. And this is primarily because of the preference of the customers in Europe for more dependable vehicles, which are the hybrid vehicles.
Are the parts same for electrical as well as fossil fuel engines driven vehicles, or they are different?
The part is designed specifically for a vehicle, but the equipment that we use is exactly the same. The equipment that we use for die casting or machining or for painting or assembly or whatever, is totally fungible. We shift the machine from one end to the other end depending on the volume that we get from customers.
Okay, sir. Thank you very much, and all the best for the current quarter and future quarters. As you have mentioned that now you have revised prices upward from last quarter, so recovery of cost will be there. So I think here onwards our margins will improve. Am I right, sir? My understanding.
We have not revised the prices. The prices automatically get revised every quarter. So there's a lag of the pricing as far as the aluminum part is concerned, and so the last quarter prices we get for this quarter quantity supplied. So that is what happens.
Okay. So there is some cost plus basis arrangement with the OEM. Is it like this?
It is only the indexation of the raw material.
Okay, got it, sir. Thank you very much, sir. You guided me best. Thank you very much, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question to the management, you may press star and 1. Participants who wish to ask a question may press star and 1.
This is Arvind Kapoor again. I'd like to add one more point here. The last year, the whole year, we picked up new orders to the tune of about 450 crores a year. And in the first quarter this year, we picked up new orders for another 458 crores in the first quarter of this year. These are the new orders. Some of them we would start supplying by the end of the year or the last quarter, but most of them would come in the middle or the next year end onwards. The program value of that would be around 2,000. Yeah. So another 2-3 years time, there's an addition of almost 8.5 crores per year to the manufacturing.
The next question is from the line of Ashish Jain, an individual investor. Please go ahead.
Yeah, good evening, sir. This is Ashish, and my question is to Mr. Arvind, sir. Sir, I would like to ask a question. When our company is going to achieve 5,000 crore revenue per annum, and when our net profit margin will be 5%? Are we satisfied what we have achieved or what we have been achieving, or we are looking for more? If yes, then what is what we are thinking about that, what we are planning about that? And if we know, then why we haven't thought about that? Thank you, sir.
We are obviously not happy with whatever we did in the last quarter, but that quarter, if you remember, I did announce in the last quarter that the improvements will start happening from the second quarter onwards of this year, and you see it from this running quarter onwards. And as to your question of 5,000 crores, I have the figures in front of me. The target is by 28-29 we should be in the region of about 4,800 to 5,000 crores. This is 28-29. And this is based on the orders in hand and the negotiations which are going on for the further orders that we are expecting. And what we have considered is only where we have 50% plus surety that we would get those orders. So we are working on that, and the margins. We have been making investments, and our turnover this year, technically we should have been crossing 27,200 crores. At 27,200 crores, our margin would have been around 4 to 5% as is. But that has got delayed primarily because of some of the programs which got cancelled, some of the programs which got delayed. But this is the nature of our industry. Now, Toyota delayed some of the introduction of some models, and so the investment that we had done, those were obviously they had. Of course, we keep on asking the customers for some compensations on whatever delays there are, which is very tough to get, but we keep on trying to get those. The disappointing part was we were very happy that we are supplying these electric vehicle components to BMWs and Stellantis. The disappointing part is that the market of electric vehicles in Europe has just come down by 30 to 40%, partly because of some subsidies which have come down and partly because of the satisfaction of the customers, satisfaction of the final user of the electric vehicle. So that has been a little disappointment, and so those are the capacities which are lying vacant. But fortunately for us, because we have flexibility in our system, we have been able to utilize those capacities for our domestic customers, like for Maruti and for Hero. And we'll be using it further for the other customers as well. We do, but of course, the problem is that there's always a lag in taking advantage of that situation. So 5,000 crores, we are 4,800 to 5,000 crores for 28-29. That's what our internal target is. That's the figure that we've given to the board also, and that has been approved by the board. The margins, if you look at line-wise, there is an improvement everywhere. Our costs are coming down. We may be able to curtail and control the cost. In the raw material, it is primarily because of the price increase, which is a lag effect, which we will get in the next quarter in any case. So next quarter, if the aluminum prices remain constant or if they come down, we get an advantage in that, but we get a better price of the raw materials. This is what happens.
Okay. May I ask you, sir, another question?
Yeah.
Am I audible?
Yes, please carry on.
Sir, I consider you, sir, you are one of the greatest in this industry, and you are the veteran of this industry. What you are seeing the future, sir, of this industry? Like, I want Rico in top 3 of the nation. And what do you think about this? Can we take it Rico in top 3 in the next 5 years?
Top 3 in what the type of components we produce, certainly we would be amongst the top as far as the variety of components, the type of components that we specialize in, and we are expanding our R&D capabilities and also our improvement in manufacturing and improvement of profitability in those particular type of components. So as far as the aluminum part is concerned, we are probably the largest in India for die casting and machining, and the orders that we are getting are all, they are not in the 12-13% range of EBITDA. They are in the range of 18 to 20%. That's what we are targeting. And so we have been a little slow in getting the order, but now there is aggression. There's China Plus One also happening, and we are taking advantage of that. And that's how we have been able to get this 450 crore orders in the first quarter this year. And we are hoping to pick up another 400 crores of orders before the end of the year. So we are talking of almost 900 crores of orders that we will pick up per 900 crores per year turnover orders that we'll pick up for the domestic as well as the export market this year itself. This will be the highest that we would have ever got confirmation for the new orders. So we are working on it, and we are working on all quality products and also with customers which are the best. We have talked of companies like BMW, Nordbremse, Cummins, Mercedes-Benz. We are talking about all these big players as far as exports are concerned. In the domestic market, we are expanding our capacity with the Maruti, and Hero and Toyota. Toyota is going to be a very, very, very important customer and probably the largest customer in the years to come. And Renault Nissan has very let us down because we set up the Chennai plant only for Renault. Their sales seem to be dwindling, and they keep on promising that this is going to happen every quarter. But so what we have done is we have started shifting. We have shifted, and we have started shifting further some of the equipment that from their lines to the other lines. And but unfortunately, there are some large capacity machines which are lying vacant. Those also will fill up. We are looking for newer orders for those, and those are probably going to be in allied lines and or different lines that we are looking at. Ashish, is it okay?
Yes, sir. Mr. Ashish has been disconnected. We will move on to the next question. It's from the line of Akshay Sharma. Please go ahead. Mr. Akshay
Hello.
Sharma? Yes, sir.
Yes, thank you for this opportunity. Would you like to help me know the update on the defense segment?
On the defense. Yeah. Okay. We are at the moment, we have orders for the ranges. I think I mentioned it last time also. And I think this quarter onwards, the shipments are taking place, and I think 35 to 40 crores worth of goods will be dispatched in this quarter itself. And then there'll be further, every quarter you see some change happening on those. And these are for the Navy as well as for the Air Force, and also we getting we getting newer orders from the other forces as well. So we're working on those fronts, and we see the traction taking place now.
Yes, that's it from my side. Thank you so much.
Thank you. The next question is from the line of Neha Sharma, an individual investor. Please go ahead.
In the start. So one just small question. So in the defense segment, the quarter seemed quite stagnant. So can you throw some light on the same?
This quarter we'll be dispatching. These are, defense, जब तैयार हो जाता है, the inspection and this and that, वो महीना डेढ़ में लग जाता है. So all that is happening. So anyway, things are lying ready and under inspection, and we would be dispatching them immediately. You will have to take the average. You might not be able to take the turnover month-wise or even quarter-wise because the tail overlap is go to the next quarter.
Okay. And so one more question. How do you see it going ahead 2-3 quarters down the line?
You're talking of defense or you're talking of in general?
Yes. For the defense side.
This year, we had initially said that we'll be doing about 50-60 crores this year, but I think we'll cross that. And next year would be even higher, and next year would be, I think, double that. So we're looking, the defenses are looking up now, shaping up now. There is a mindset change of the defense authorities, placing the orders in the domestic industry and accepting them, and so that is changing now. You see that push on also, and they are looking for Make in India products now.
Okay. That's it from my side. Thank you, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. Participants who wish to ask a question may press star and 1 at this time. Thank you. A reminder to all participants that you may press star and 1 to ask a question.
Okay, I think we can.
Yes, sir, there's a question. It's from the line of Sunil Nagpal from Lotus Investments. Please go ahead.
Yes, sir. Good afternoon. My question is, what would be the margins on the defense front, whatever production we are expecting in the next 2-3 quarters, to start off with?
Okay. There is some machining component where the margin is under 10%, is about 9 to 10%. And then the other couple we're talking of there, the margin is in the region of about 15 to 18% to 20%, depending on what item we are supplying. And so that's the range that we are working on. And as the volume picks up, the margins also will get further fine-tuned.
So on an average, can we assume 15% across all the defense products?
Yeah, it'll be yes, 15% plus.
Average, yeah. Thank you, sir.
Yes, sir. There are no further questions. I would like to hand the conference over to the management for their closing comments.
So, in closing, I'd like to say that this particular quarter has been a little disappointing, but we had mentioned in the last quarter on conference call that we will see the improvements coming from the second quarter onward. In the second quarter, we expect the sales to go up further. This quarter, we went up by 5%, but next quarter, we expect another about 7-8% increase. And the quarter after that, we expect another 7-8%. The last quarter, the increase is almost 20%. And this is as per the current manufacturing schedule that we have from the customers. Further on this, by getting the largest share of the business and also newer component which can be started immediately, both with Maruti and Hero, and with Bajaj, which are the fastest to start with. For the exports, it is almost a 6 months to 1 year cycle before the components actually come into production, from when we get the order to the first suppliers. But for the domestic market, some of the customers, we are able to push some of the components. We are very happy that last year, I'm repeating it, last year the total orders we received were 450 crores per year to be supplied. This year in the first quarter, we've been able to manage 458 crores, and we are hoping for another 400, around the same amount, 450 to 500 crores to be added further to this. So this is probably the highest number of orders that we would have picked up. Now, when I say orders, means confirmed, picked up, and with in case the dies and other equipments are required, advances are given to us. And the deliveries would start, in some cases, starting in the last quarter of this year, but most of them will start in the middle of next year and the year after that. So we have orders for 25, 26, we have orders for 26, 27, where the production delivery actually start on then. So we are very happy that these orders have come in, and these are all good margin orders, and they are new orders, and for high technology stuff. For exports, this year we'll be touching about 475, 480 crores. But next year, the orders that we have in hand and the deliveries that we are required to give, we'll be crossing 600 crores next year. And that would be a substantial jump for the exports. We will very much cover up for the losses in the components like PSA and others where the drop has been drastic. And let's hope the market improves, and let's hope things calm down in Europe and the electric vehicle market again picks up. And we have bid for many electric vehicle components for BMW and others as well. And we are getting orders for those as well. But the thing is, are they going to pick up the quantities that they are promising today? That is one big question that is coming to our mind. So we are being a little cautious when it comes to investment as far as the electric vehicles are concerned. But on the hybrids, we are very excited about those, and very excited about the confidence and faith that Toyota is reposing in us over the Japanese companies which are in India. And we won these orders in competition with the Japanese suppliers, and we are all very excited about it, but very happy about the confidence of Toyota on us. That's all but let me tell you that this current quarter will be better, and the quarters that you see from now onwards will be even better. Thank you so much.
On behalf of Rico Auto Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.